Hello and welcome to the Stock Planner channel. Today we're going to talk about Morgan Stanley, a very large financial holding company, one of the largest on Wall Street, and the fact that I'm going to go short on it. Let me tell you the reasons why. Let's get started. But first, I want to remind everybody that we are an educational channel. We are trying to share some ideas and learn and win. Nobody's advising anybody of anything. You must do your own due diligence. Okay, Morgan Stanley. Morgan Stanley is in the financial sector. It looks like the one day in FinBiz, the financial sector did not do so well. Technology did and utilities did. And also on the 1 week performance, financials are at the bottom. So there's a headwind for financials. But look at that channel. Up, up, up. Now, when a stock is channeling, every time it hits the top of the channel, it'll come back down according to the channel theory. And every time it hits the bottom of the channel, it'll swing up. Well, this Morgan Stanley is at the top of the channel right at the moment. So will it come back down? This is what I'm thinking, especially since financials are not doing so good. Now, this is a good company. And the target price of this stock is 103, but it's trading at 104. Not so good. Very profitable, though. And it's shortable and optional 1 week. That's what we care about. And trades in enough volume. The recent's been downgraded about a week ago. Tip Ranks is a free tool out there. The paid version lets you do even more. But I like it because it gives me a nice graph. And it's trading at 104. And it says it's going to go to 104. There's 15 analysts. And they're saying it's moderate buy. And it has been going up lately. Overall ranking of 7. This is the thing that I've noticed in reading about Morgan Stanley is that insiders are selling. All everything else looks pretty green. And the hedge fund activity has decreased. We don't want to see that too much either. Looking at the trading view chart in the daily time frame, the job of a swing trader is to catch these swings and to make some serious bank. This would have been a nice slide up. This is the zigzag indicator. It's a perfect indicator. The last couple bars, it doesn't know what it's doing. And the reason why it doesn't know what it's doing and the reason why it's perfect is it looks to the future. And then it paints these bars in there after it gets data from the future. We don't have that ability. And so we have to find indicators that predict this up. This is the MACD, the stochastic RSI, and the RSI. When they swing around, and this is way below the zero at the time to buy. And this would have, if they occurred at the same time, this would have predicted it. Now we got a situation where the stochastic RSI is pointing down, the RSI come around. The MACD is not well deep in the overbought condition, but it recently was, and so we're going to say that's going down too. And I do think it's going to come down to around 100 very soon. So keep that in mind. We're going to come back to this chart, but I'm thinking that this is going to come down over the next 2 months based on its headwinds and come down to 100. Looking at another tool I use often. It's not a free tool, but they do give you 5 free analysis stocks a month that you're going to want more. Morgan Stanley is a holding company. It does retail and commercial. It handles all kinds of financial instruments. It's worldwide. It's huge. And the qualities about this is it's trading around its fair market value. I try to find stocks that are trading below fair value. Had good earning growth over the past 5 years, but it's not looking too good for the future. It pays a good dividend of around 3%. The insider share selling is concerning, and they've been diluting their share price. I'm usually looking for stocks that are trading below its current prices. It's trading around. So this is one factor, and it's a major factor for me a lot. I like to buy undervalued stocks that are growing. Okay, growing, future growth. Let's take a look at that. And that looks like a flat line to me. And that looks like a flat line for the revenue and earnings. Flat line. And this is what they're saying, a little histogram. This company is going to underperform the industry and the market. Headwinds. Back to the chart. Let's blow this up a bit. Trading View is free. It allows you to do all kinds of indicators. These are the 3 I chose. And I'm thinking it's going to come down to 100. This is support. This is resistance right here at 105. Support is at 100. So how would we trade this? Would we short it? If you're a small account holder at $104, trading about $1,000 at a crack, assuming that you have around $5,000 and then $5,000 margin, you could buy 10 shares, or you could trade some options. That's what I'm going to do. Let's see if we can find something around the 105 coming down to 100 over the next month or two. Another tool, it's free, Option Strat, lets you simulate your option trades. Very, very cool. The first thing I do is I set this on 8% because I have back tested these stocks, the stocks that I'm presenting, do well within an 8% profit target. And then I try to find a credit spread, usually a bear call spread or a bull put spread. In this case, we're going to go short, so that's going to be a bear call spread. That's the net credit and the max loss is pretty close. You know, I'd like to get a 1-for-1. It's not possible though with options unless you go real far out. You got to play with it a little bit, and I want to only put $500 up instead of my $1,000. Remember, if I shorted it, I would need at least $1,000, $1,200, and then we can get 10 shares. This time I get 500 shares. It only cost me $500, and I'm tying up 100 shares. And this is close enough for me, and we have the 8% target. So over the next 2 months, 79 days, 80 days, nearly 3 months, if it gets down to here, to my 8% target, which would be 95, or if I think it's just going to go to 100, if it gets down here in the next month, I can take down about 70 bucks, 65, 70 bucks. So 65, 70 bucks on a $500 investment. That's about 6 or 7%. Not bad. There's 100, and if it gets to the 8%, I will get, especially in the next month, 156. Now, if it goes the other direction, let's just say 3% is my stop loss. I'm going to lose 60, and I'm hoping to win 156 or 62. 156, 62, or lose 60, which is about 50-50. So that's my choices. What's going to happen in the next month? I think it's going to go down, and if it goes down, I'll take either this, and if it goes down quick, I'll take this. 156. 62, 156, and if it goes bad, and my stop loss is 3%, maybe it's 4%, but 3%, I'm going to try to, in a month's time, stop it out at $60. That's my real risk. And I have plenty of time. If things are going my way, and it's hanging in here, I can take profit any time. If at any time it exceeds 3%, I can stop it out and close it out. Gives me a lot of playing room, but if it pegs at 8%, I'm going to take it right then and there. And if it pegs at 8% in the wrong direction, I'm going to take that loss right away. I'm not going to wait, because usually when it pegs like that, it's not coming back around. But if it's hanging in here, even if it's a loss, I'm going to ride it. Even if it's here until, you know, towards the end when I don't see no hope. But I'm going to keep it. I'm going to keep the trade on in this area here and hope for the best. And that's what reason why I do that is my back test shows me that, you know, I have a 75% win rate, and stocks do come and go around unless it's deep in the bad territory or deep in the good territory. Usually deep in the good territory is not worth waiting for. You know, if I could take the profit there, I'll wait, you know, another 20 days and take that 280. Anyway, the options give me a lot of playing room. I can do my stop losses, my good risk reward, 3%, 8% win, 3% win, loss, 8% win. That's good risk management, where I win more than I lose. Well, let's see how this trade turns out. So I did this morning with this very chart. So I took that trade just exactly like it was presented and got 292. Sold a call option and bought one. 292. And there's the commissions. Well, that cost me $1.41. I used Interactive Broker. 280. I got 292. That's 300 to 200. Those are good odds. That's not a 50-50. That's better than a 50-50. But I had to go to November 19th to get that. But my playing field is nice and long, and I can get out at various different times on my playing field. Profit target, 8%. Stop loss at 3%. What do you think of this trade? Enough money for you? Let's see how it works out. Please leave your comments below. Morgan Stanley, going short. Do your own due diligence. Don't take yourself too seriously. Happy trading. Catch you on the flip.